Multiple participant. Okay.
You're able to make me a presenter.
One in mute. Yeah. Okay.
Wait, how do you mute yourself here? No. There's somebody else signed in.
So maybe put one here in mute.
Is that better?
Hello, Sergio, ¿cómo estás?
Hola, ¿qué tal? ¿Todo bien? Aquí andamos. Saludos.
Okay.
No, my speakers are off. Can you hear me?
Yep, todo bien.
Okay. Danos unos 5 minutos para que ahorita empezamos, ¿ok? We'll start in 5 minutes.
Ok, gracias.
Okay, Lorena. You got it? Need a clicker or?
Oh, they're gonna see. Oh, they're just gonna see like my actual screen.
Yeah, they'll see the presentation, but if you have any questions or whatever,
Yeah.
because sometimes what happens is that we they'll see you here and then they're like they're not able to see the presentation.
Okay.
And now with that, that's gonna work perfect. Hola, hola, ¿cómo estás? Lili. Juanita. Good to see you again. Good time. Hello. Good. See you again.
Yes. Hi, I'm Chris.
Chris, nice to meet you.
Nice to meet you. So what's your name?
Lily.
Lily. Lily. Nice to meet you, Lily.
So you're gonna give us a presentation and then you can just take notes?
I'm
You
sure.
have to get-
I'm sure gonna try. I'll do my best.
Okay, so let me put this away.
Yeah, I'm gonna email this to everybody after, so you guys will have all the slides. So if you want to take notes, you're more than welcome, or you can just write down my phone number and you can text me with any questions you have or call me. Yeah, we'll get to that. Did everyone have some CPE classes, some continuing education?
Is that
what you guys are doing?
renewal, I guess, for license renewal. we
Yeah.
have To continue taking that.
Alright,
So this is a lunch and learn. We can eat
yeah,
and learn. And learn.
Isn't it nice?
this is great. I love this. I appreciate you guys having me. Thank you.
You guys ready? Lorena, Sergio? Okay. Who works with Mindy?
Me.
You? You did a deal with Mindy, maybe you work with Chris? He was on the back. But Tony, are you there? Are you there tonight? No, Tony's not there. But Mindy, she's a private investor, and Chris is one of the loan officers that work with Mindy. And they got pretty good program, kind of like a Sarah's program, Sarah Montes program. They're not a hard money lender, but private investment loans. So these are good for people that they got money, they don't report a lot of taxes, but they can show how to make all the money. So he's the expert, so he's gonna explain everything to you guys. Okay, and they can do the loans in Dallas, in Houston. We got an agent in Houston too.
Yep.
Okay, so this is Chris. Okay.
All right, thank you, everybody. I appreciate it. You work with Mindy Henderson? All right, that's my partner.
So you do work with her.
Yeah, so Hola Mortgage is our new company, and now her and I are joined together. So this is a clean platform that we have, and I'll go over that a little bit. So previously we were doing everything private, but now we have a lot more just capability because we can either broker, or we can fund them in-house and hold them, or we could fund them in-house, hold them, and then sell them on the secondary market. So we have all three avenues. So we have more than just one product that we used to do, right? So we have a new entity that's been licensed, and this is about 2 weeks old. So we're still working on some infrastructure, but our products are live, our funding is live, and we're going to market. So I have a few things just to hand out. One is just a sign-in sheet, because if you could just write your name, your phone number, and your email address, I'm going to email this presentation to everybody. And then I'll also email you the handout that I have and some other information. And then behind it is a handout that we're going to go over in a few minutes. For those of you on Zoom, I will try to think of how I can get this to you.
Yeah, I'll get it. I'll send it over to them.
We'll
I'll scan it and send it over to them.
Okay, well, I can just email you the PDF. Here's a pen. I stole it from Laura. I'll give it back to you, I promise. So my name is Chris Azzaretto. I'm one of the owners of Hola Mortgage with Mindy Henderson. We do have a bilingual team behind us as well for loan processing, and we do have a bilingual loan officer as well. I am getting tutored in Spanish, and I'm way too embarrassed to even try to speak it at this point. But I want you to know that it is a priority of mine, since almost all of our clients, all of our borrowers are Spanish speaking. Not 100% of them, but 90% of them. Hola Mortgage is something that Mindy and I created. The entity was licensed about 2.5 weeks ago. So the company is new, but the experience is not. Mindy's been a loan officer and an underwriter for about 35 years. I've been doing this for about 3. My previous life was in salons and finance. So I fell in love with lending, and it's been a lot of fun. So what we do, so we are a direct mortgage lender, and we focus on borrowers who want to qualify for a mortgage using their bank statements rather than their tax returns. So I'm sure you've heard the terms full doc, all to doc, or non-QM. This is technically a non-QM loan, which simply means you're not using your federal income taxes to qualify. Do we have clients and borrowers who come to us with tax returns? Yes, of course. Do we do those loans? Yes, of course. But one of our specialty, our niche, is really understanding people who are self-employed, 1099, and I-10, who want to qualify for a mortgage using their bank statements. It could be for a variety of reasons. So just a little anecdote. When I was 28, I bought my first business. I just saved all my pennies and I bought a small little salon. And like 2 years later, I wanted to buy my first house. And as a small business owner, I did everything in my power to minimize my taxable income, right? So when I went to go buy my first house, which I still live in, I went to my bank and they were like, "You don't make any money, buddy." And I was like, "Yeah, I do. Like, can I show you my bank statements?" And they're like, "That's not how this works." So I had to wait 2 years to buy my first house because I had to start reporting all of my income on my tax returns and, paying more tax on it just so that I could show the bank that, hey, here's my federal income tax returns. Now will you give me a mortgage, right? And they said, sure, but because you're self-employed, you have to put down a minimum of 20%. And I was like, you gotta be kidding. Okay, I just spent all my money on my income taxes because you guys made me do this, right? So once I graduated from my previous career, I learned that wasn't the truth. You could do other mortgages and prove your income in other ways. This is how we got here. So this is our specialty, and we work very quickly. We have a small team. There are 6 of us in total. 3 of us are purely admin and processing. So one of the biggest questions that I've gotten recently was, how quickly can you close? It's a very loaded question. Right? If I have everything that I need in my hand, we can close in 5 or 6 days, as quickly as title can work, as quickly as the borrower can move, and as quickly as the seller can move. Is that realistic? Probably not, right? How often do you get a full package of everything on day one? But we're going to get into that a little bit. But typically, I can tell you in our history, even before Hola Mortgage existed, we have never missed a closing date. We've never pushed back a closing date. And if there has been any sort of delay, it was not because of our lending. It was because of either the seller or there was a document that was necessary. But the underwriting was complete, the disclosures were submitted, and we were going to close on time. So who here has had a client who bought a house and you got a mortgage from using bank statements versus tax returns? 1, 2, 3, 4, 5. Okay. So it's doable. Long story short is a lot of business owners don't want to claim their income on their tax returns, right? And they've learned that it's way more beneficial for them to maybe pay slightly higher interest on their mortgage versus paying 40% of their income to the US federal government, right? The math is easy. So one thing that's really different about bank statement mortgages in general, and this is just important for you guys to know, even when talking to your clients, is there's no automated underwriting system. So if someone submits tax returns to us, there's something called an AUS, an automated underwriting system. Everything gets uploaded, their credit gets uploaded, and we can spit out a loan estimate in 30 minutes, right? With bank statements, that is not the case, because we have to manually review their bank statements, look through all the transactions, quantify their income, ask any questions about anomaly deposits that might be really large or not regular, because we really have to understand, based on federal guidelines, that we're not breaking the law and there's no fraud, right? That's important. But that's our biggest skill, is understanding, hey, if someone's gonna use their bank statements, that's what makes us good at what we do. There's other people who do what we do, and this is just our niche, this is our specialty, and this is what we thrive on. Let's see. So people who are using their bank statements typically can only qualify for a mortgage via their bank statements versus their tax returns. Some people can do both, but no matter what, if you use your tax returns, more likely than not, you're just going to have an opportunity at a slightly lower down payment and probably a lower interest rate. And it's simply due to one word that makes this whole business tick. It's called risk. The lower the risk for the borrower and the lender, the better the terms. Okay, so when you're using bank statements, there's slightly higher risk because we're guessing at some things. Okay, but we get a lot of questions about credit. Can you do a 10% down payment if someone has, a 500 credit score? Probably not, right? Do we want to? Of course. But the fact of the matter is, we can't put somebody into a home knowing that the probability of default is high. That's very illegal, and it's just, ethically not great. So credit scores are important. And I have it in here, no matter what type of loan or borrower or how the borrower qualifies, a higher credit score will always mean a lower interest rate. We all agree there. Okay. So because we have separate sides of our funding, what that means is we have private capital that we can fund loans with, and we also have bank capital, right? Warehouse lines of credit. So the private stuff, the private money, we have more flexibility, right? I get to make those decisions on, hey, they didn't really qualify for this loan because they didn't season their cash for 60 days. Maybe they seasoned it for 20, right? Because they had all their money in cash. Those are loans where, hey, I'm going to tell you, look, we can do this loan. It's the most beneficial loan for them to get into their home. They're going to want to refi probably in 1 to 2 years, and we will help them do that. It doesn't have to be a forever relationship. Now we have the bank side where we're funding from a warehouse line. Very common in the mortgage industry, right? That's what makes us a mortgage bank versus a broker. And what that means is we have to follow somebody else's guidelines. Okay. That's very common. And I would say 65 to 70% of our borrowers fit into those boxes. But there's a significant percentage, and that percentage is growing, where they don't fit into those boxes. And it could be for one little minor thing. Maybe their debt to income ratio is 2% too high. Maybe they only had 10 months of bank statements versus 12, right? These are all little things that kick somebody out from getting a mortgage. Where it may not seem like a big deal, but it is for these buyers of the mortgages on the secondary market that they're not making those decisions, right? They work for massive companies. They're a small piece of a big team, and they don't have that authority to make those exceptions. Okay, so that's what makes us a really good resource for your borrowers who are like, hey, everything went really well except for this one thing. It's like, okay, well, we might be able to help them with that. So from a bank statement mortgage side, this is I would say somewhat of an opinion, but from what I've seen in the market, typically you can go down to about a 640 credit score to really approve a bank statement mortgage. I've seen some that do 620, and some that do really low credit, but their interest rates are 12.5%, 13%, whatever it might be. But in general, if you have a borrower that is strong credit, they have credit lines, and you can really verify their income well, going down to like a 640, 660 is really where they're still going to be in that competitive interest rate environment of today. Okay. So for us, we review special situations. So we will go down to a 580. If you have a client, and we do no credit as well, but if you we'll go down to a 580, and then if you have somebody below a 580, we just say, hey, give us a call. Let's understand the scenario here. We're not subprime lenders, and I want to make that really clear, right? We're not subprime lenders, and I get a lot of sometimes agents will call me and they'll be like, hey, I have this scenario. I'm like, hey man, that's not someone who I'm going to write a check to, to buy their house. Like, I'm probably not going to get paid back on this, and I don't want to take their home, right? So we're not subprime lenders. We avoid that. But I've seen credit scores in 580s that when I look at their credit report, it's way stronger than someone who has a 650. And I am not kidding. And it's mainly because that person with the 580 is 45 years old, but they only have 6 years of credit history, right? They have 2,000 recorded payments on their credit report. Not one of them is late, but they max out their $15,000 of monthly credit every single month because they have a small business and they've never applied for more credit. So everything just keeps working against them, right? They're using all their credit every month. Their credit score is staying around a 580. They can't really get more credit, but they've also never missed a payment. I love that person, right? You work hard. We're going to be able to help. We're going to be able to build your credit because all of our servicing reports the credit. So we're going to help you build your credit. You should be able to refi into a better loan in 2 to 3 years, maybe less. But that's why we always that's why we have exceptions. So no credit. Who here has done who is a client who's an I-10 buyer? All of you?
Yeah.
Fantastic. Okay. So a lot of I-10 borrowers, they don't have a credit score. That's a tough one, right? It is tough, but there's something called alternative credit verification. You guys are probably familiar with this term. I don't mean to be patronizing, but I'm just going to go through everything that we look at. So we do verifications of rent from their landlord, or verification of mortgage if they already own a house. We'll look at their employment if they're not self-employed, or if they are at 1099, but they work exclusively with one contractor and they're a subcontractor. We'll kind of get a feel of that relationship, and we'll reach out to the contractor if they have the same name on every 1099, right? We're going to get a VOA. We'll look at utility bills, phone bills, car insurance, and then we actually, before we close, we add those trade lines to their credit report. So we establish credit with them if they're okay with it through the buying process. So that way, when we close that loan and we basically refresh their credit at closing, they now have trade lines in their credit report that are going to help them build their credit. So it's really helpful for them as well. Okay. There's a sign outside your office, right? What does it say?
I-10 with 5% down.
I-10 with 5% down. The race in the mortgage industry today is not interest rates. Interest rates are high everywhere. Okay. So now the race is, it's a race to the bottom on down payment. Okay. I can teach a whole class on the economics of low down payments and higher mortgage payments versus a slightly higher down payment and a lower mortgage payment. But we're not going to get into that, but I will show you something about that in a little bit. So that's the race in the mortgage industry right now. First Financial Bank, they have a great program. There's no denying it, right? They've got a 5% down. I think it's like 6.5, 7, 8% interest. But they have to be in very specific, I don't think they're called opportunity zones, but they're called minority commercial areas. Census tracts. Thank you. I was close. I just read that before. So with bank statement, but they only use tax returns, right? So with bank statement qualifying borrowers, it's tough to get that 5% down payment, right? Unless you have a social. But if you're I-10, the most aggressive you're going to see in the market today is 10% down. Okay. And those are really, really good programs. I get a little bit nervous when I see, a 600 asking for 600 credit score, asking for 10% down, but we always look at that credit report. But there's a lever, right? If someone has a 600 credit score, but they make $50,000 a month and they're buying a $300,000 house, 10% down is great all day long, right? They can pay that mortgage 5 times a month if they wanted to. So there's always those levers that you really have to look at when you're underwriting somebody. But in general, higher risk using bank statements, right? There's some things that got to give. One of them is down payments. So they always depend on borrower specific situation. We do have an outlet right now for non-I-10 bank statement borrowers with a 700 plus credit score that they can do a 5% down payment. Okay.
No, I think so, that's.
It's a social, correct. Now, of course, they have to be able to afford the home, right? They have to have a reasonable DTI metric on the back end, but if they have 740 plus, they can put 5% down on their home, and
This is with bank statements, right?
this is with bank statements,
5% down,
5% down,
owner occupied.
owner occupied.
You're kidding. So
Okay.
owner.
It's 740 plus.
740, are you kidding?
I am not kidding.
That's good.
Yeah,
So you can take it back.
please. Yeah, I'm gonna send this to you.
Oh, yes, hold on.
I'm gonna send
So I
you the
won't
thing.
forget. So I
Okay.
won't forget. Okay, so let me see if I understand, 5% down
Mhm,
with social security, with bank statement,
mhm.
and they have to have 640.
740.
740.
Yes.
That's
Yeah.
it.
Yeah, so those, that's the highlight, right? There's always the fine print, right? So if they want to use 12 months of bank statements versus 24 months of bank statements, those move the needle on interest rates, okay?
Okay, so how many bank statement for these 5%?
24 months.
24 months would be ideal.
Uh-huh.
I think there are certain exceptions in the guidelines for 12. But that's also that's what's gonna impact that is if they have a different credit score. Okay,
What about the interest of these?
so from what I've seen in this program, it is between 9.3 and 10.25 for that. Okay.
Then do they can refinance it quickly, or they have to be dying for several years?
These are, no, because it's technically a non-QM loan that's in the higher price category, there cannot be any prepayment penalties. So there's no,
So
so they can,
So
They
they
can
can
refinance. So they can refinance.
refi whenever they want.
But the only thing when they're going to refinance it, they have to have everything that the other people.
Yeah.
Yeah, the reason is because, they make good money, but they only report little bit taxes, and then,
Mhm.
in order to prove them. In order to them to prove there are, can make, can they make multi-payment, it has to be to the taxes.
Mhm.
I mean, to their income, not to the income tax.
So is or they pay more to the IRS
Yeah.
for 2 years, or they pay more on the interest?
Higher interest rate, yeah.
And put more on down payment, or like, is it 5% is not bad,
Say that again?
it's 5% is not bad.
No?
No.
It's good, that's
Wow.
right, it is
They
good.
Yeah.
don't have enough money to put down, and
Right.
they want to, and they make enough money to pay monthly.
Yep. Yep, so that's the double-edged sword, right? You're putting down 5%, but now your monthly payment is, $5,000 a month instead of maybe 3,500 if you would have put down, 15%. Right, so there's always a give and take, right? So there's that program is through a non-QM warehouse bank. So we would fund that loan and do all the underwriting in-house, but we wouldn't keep that one. We would turn around and it would go to basically a big warehouse bank. It doesn't affect the borrower, right? They don't feel it, they don't touch it, they just get a letter in the mail that says your loan's been sold, right?
So
That-
does the interest rate stays
They're fixed.
fixed?
Yep. And we're gonna go into this a little bit, but the same warehouse lender has another program where it's only 3 months of bank statements, but then a 24-month P&L for a business owner. So it's another program. I think that one's 10% down, but there's a lot more credit score variability. I didn't want to get too specific with loan programs today. I will answer all your questions as much as I can, but I didn't know how granular you wanted me to get with those specific ones. So I try to give highlights, but I can always come back and do a very specific lunch and learn on, any programs that I say, we're like, I want to learn more about that one. I can always come and do another one if that's okay with you guys. Is that all right? Okay. So cash to close. We've all had a client that says, hey, I have all this money. It's, it's under my mattress. And you're like, well, sorry, you can't walk into the title company with 100 grand in a suitcase and close your house. It just doesn't work that way. This is a needs to be in there slide. All funds for closing needs to be deposited into their bank account prior to final loan approval. Always remind your bar or your client, if they do have a lot of cash and they're, they want to buy a house in 90 days and, in your first sit down with them, they tell you this, and you have a 90-day window, no deposits more than $10,000 in cash at the bank. Okay.
Is it weekly or
Monthly.
It's
One time?
It's at one time. But there's
monthly?
any in one time you cannot go, or you can, but if anybody in the world is in the United States and they go and deposit $10,000 in cash at any bank in the United States, there is a suspicious activity report filed.
Yeah.
So they can go and deposit every day 9,500?
If they want to. I think that's a little risky, but I would try to space them out and do, random numbers. Don't go and do, hey, $7,000 every week.
Yeah, 5,000 today, tomorrow.
Yeah.
400.
Exactly.
And
Exactly. And what that does is just keeps you below that radar for your threshold. Okay. Yeah. And then, okay, no title companies except cash at closing. There is something called seasoning for your down payment. Not every, but all loan programs have different seasoning requirements. We were talking about this before. Some programs require your full amount of down payment to be in your bank account for 90 days prior to close. Some require 60, some are 30. I'm good with 24 hours. As long as I know that the cash is going to be there and you send me a screenshot of your bank account with your bank account number on it and that cash is in there and we know that we're going to close the title, that's great. But if there's, if they're qualifying for, a specialty program, we have to go by those guidelines, and we will tell you right out of the gate, hey, you need to know this because that's going to impact how you help that buyer shop for a home. Okay.
All the program that you have
Mhm.
is like this, with 24 hours, but you see that.
That's for like our private one. Yeah, we're good with 24 hours as long as the cash is in the bank prior to closing.
But with all the products that you have.
No, the other programs, they're different. So some are 30, 60.
No, with you, the product that you have.
Well, we have multiple programs.
Oh, so they have.
They
all
have
the-
their own money.
They have their own money
Loan.
to fund their own loans, but if it doesn't work, they have the other programs that they send to the lenders.
Yes.
Okay.
So
So they have their own money, so they could fund their own, that's how Pedro was making the sales,
Correct.
with their own money.
Yeah. And it's, I kind of feel bad because a lot of Pedro's clients probably would have fit into better programs than what we offered. We just didn't have them back then,
Yeah.
so now we have more. Does everyone here know Pedro?
Yeah.
Okay. I didn't know if everyone knew each other. So I think, Pedro and
Lily and Maria are the newest one. here.
okay.
Well, we know Pedro.
Okay.
Tell us how many closes you did with Pedro.
So we closed, I think we did 15 with Pedro in 2024. And then Pedro did 24 with Mindy in 2023.
Wow.
And I'm not sure in 2022, to be honest, but
Yeah, and
it was about 40 loans over the last, 24 months. Yeah.
and his strategy, he had a specific strategy. That's why he make all the money, and he bought a bunch of houses, and now he's living on the beach in Merida.
Exactly. Yeah. It's funny. I have a slide specifically about Pedro in here. It's funny. Yeah, no, it's good. It's good.
We want to be like Pedro.
Yeah,
'Cause
so-
he caused a lot of deals. Now
Yeah.
he's living on the beach.
So one thing about Pedro, and we're going to get into this in a minute, is he really understood what it took to hold an I-10 buyer's hand across the finish line.
Mhm.
Because there is no doubt, I'm not going to lie to you, they're more work. You're going to work harder for that commission working with an I-10 buyer. It is just a fact. In today's market, we're all working harder for our dollars, right? We all are. There's less trading volume. Rates are higher, people are making less money because inflation's through the roof,
Mhm.
right? We're all working harder to make probably the same or less than we did in previous years.
Yeah.
So it's just what it takes right now. So loan terms. I prefer, as a lender and a loan officer, a 30-year fixed rate, no prepayment, no balloon rate mortgage. That is my favorite product because it's easy for people to understand and it's much less a risk for the borrower because they're not stuck in a loan. They can refi in 6 months if they want to, right? There's nothing that keeps them in that loan, okay? Unless they want to be there. Does it work for everyone? No. Some people are willing to do an adjustable rate, or they're willing to do, a 5-year, 30-year amortization, but a 5-year term where they're gonna have to refi in 5 years. And they're gonna get a better rate for it, but it's a risk that borrower takes. We handle all of that with the borrower. Our job and our duty, fiduciary duty legally, is to make sure that the product that borrower is in is best for them. It's not best for me, it's not best for you, it is what's best for them, okay? And every scenario is different. Most of the time, people fall into this 30-year, no prepayment, no balloon, right? It's just an easy one to do. Interest rates. The question that I get hounded on every day today, right now, is it's not a one size fits all. Sarah Montez, I heard her name. I work with Sarah. I'm closing a loan with Sarah today. She has a one size fits all program, right? 15% down, 12% interest, right? If that's the route that borrower has to go, that is that borrower's choice, and that's what that is what they've been sold and chose to do. Okay, that's just Sarah's program. I like Sarah. I funded 6 loans with her. They're on my balance sheet, and her and I have a great relationship. But it's not a one size fits all for every borrower. So interest rates vary, down payments vary. So we see a wide span of rates for bank statement programs. As low as 7.5%, those are people who are putting, decent amount down. When I say decent amount, they could be putting 25, 30% down, and they have a 740 credit score, right? That's going to be or 750 credit score. That is for a bank statement mortgage these days, that's pretty much in the market. You might be able to get lower, high 6, low 7, but that loan officer is probably not making any money. It's kind of how it works. Up to 12%, right? So Pedro, all the loans before I was more experienced in this business. Every loan that we did with Pedro, it didn't matter what the person made or how much money or what their credit score was. He sold them a 12% rate before he even brought them to the office. He just got them seasoned and said, "Hey, look, you want to put down 10%? You're probably going to pay 12% interest." It didn't matter if that person has 700 credit score or no credit, but somehow he got them on board with that prior to them ever talking to us. And that was the only product that we had 2 years ago, right? Now there's a huge range because we just have access to more programs. So closing costs. Oh, sorry, I think I might have missed this again. You all know this, but interest rates always depend on down payment, credit, documents that they use to qualify, and then there's other considerations. So closing costs. When I bought my first house, big sticker shock. I had to put another $15,000 into the purchase in addition to my down payment. And I was just, no one ever told me.
For closing costs?
Yeah, for closing costs. It was just, the origination fee, my escrow, my insurance, all that stuff with my bank. And it was just one of those things where buying a house was harder than buying a business. So when I got to title and I'm signing my documents, I was like, what's this extra $14,000? And they're like, "Oh, those are your closing costs." And I was like,
Loan officer closing costs.
I was like, cool. What was the bank? It was escrow, it was insurance, it was title, it was, appraisal, all the stuff,
And also
right?
this thing that you have to pay, I don't know how many insurance monthly, ahead of time,
Mhm.
or the month that you have to pay
Right.
ahead of time, so that way that tell you, if you wanna the first monthly payment you pay in the second month, so you don't pay the first, but you are paying this already, and you don't cost, you pay your
Right,
first
a year
month,
of insurance typically,
a year of insurance.
Prepaid.
Plus
I don't know how
another-
many-
plus another 2 months typically. So it's usually a year of insurance plus another 2 months, and then anywhere up to 6 to 9 months of prepaid property taxes. Plus your prepaid insurance or interest if you're closing on the second of the month, right? So it just starts to add up. Do you guys want to take a break? Are we okay?
No, we can.
You good? Okay.
Oh, but I have a question. Okay,
Yes.
so coming back to the ones that you said, I think with 5% down.
Not I-10,
Not.
not
No,
I-10.
no, okay.
Yeah,
No, I can't.
No, I think with 5% down, that they have to have 740,
Credit score.
yeah.
credit score. And the bank statement, they have to have 2 years of bank statement, or can be only one.
They're gonna get a better rate if they have 2 years of bank statements. Yeah.
That way, they can have the interest rate about 750.
No, that interest rate, because it's 5% down, is gonna be nine and change, yeah, yeah.
So on the regular one, so the 30 years, what kind of interest rate do you have on that one?
They're all over the map. I mean, they go from 7.5 to 12, it's just, they all depend on down payment, credit score, even earnings, right?
Okay,
So it just depends, and we're not
regular bank.
yeah, but we're also not our rates are gonna be competitive with other lenders who do bank statement programs, and we'll rate match, we'll do all that fun stuff. Our goal is to help you guys and get deals done. It's a new business, we're willing to get very aggressive to make sure that we can build the relationships, right?
Mhm.
But at the end of the day, they really just span. And from what I've seen in the I-10 space, if you want to put 10% down, you're gonna be paying in the 9s, low 10s. It's just a higher risk, right? Especially in this market, it's just tough. But that's, we don't sell on rate. We sell on get into your house, make your payments on time, and be a good borrower, and you can refi. But at the end of the day, a lot of people don't blink an eye at that 9.5%, 10% rate. They want their home, and they know that, hey, if they're not here legally, they don't pay taxes, right? There's risks there, right?
All of these that I have been working, they pay taxes, and they pay more than other people. Yeah.
If they exactly, and they're going to qualify for a loan using their tax returns,
Well,
right?
yeah,
And they're
yeah,
gonna,
they pay taxes because,
Yeah.
if they do some, maybe they don't report all of this, some, the majority, but they pay.
right. So that's the tricky part. You can report some of your income, but if that income's too low to qualify for your mortgage, then you're gonna have to use bank
Oh, well,
statements.
exactly, yes.
Right.
Well, we come back
Yeah.
with this.
It's funny, whenever you look at all these positives, there's one extra positive that drops the great golden picture, right? You're like, okay, wait, oh, but then this, right? It's
I usually, so the clients that I have with, Mindy before, it's because we already tried like different options, and for some reason they didn't qualify.
we're gonna get there.
So what I told them is like, hey, this is what we can do, just to get, to get the house.
Yeah.
And then after 2 years, we
You
refinance, and then we move with a better
Mhm.
income.
And that's kind of one of the things too that we're now able to do is if they have to go that private route where they're going to be paying a little higher interest, and it's not significantly higher. I mean, I've seen loans where someone was going to pay, 10.7, but then it got denied at the when they got to final loan approval, and it said they're paying 11.2. So is it a half a point more? Yes. Is it super significant? Not in my book, not if you're getting the house that you want,
Right.
but yes, does it change the payment? Of course. But now we have the ability to say, hey, if we have a borrower who we keep on our balance sheet and they've been paying, 11.5% interest for 3 years, I'm going to call that borrower and be like, hey, I've got 3 years of on-time payments. It's going to be easy to refi you into an 8% loan today, So we have the ability to do that now, where previously we didn't.
But with you, so the
Yeah.
refinancing.
Well, they can if they want to. I mean, they can use anyone they want, but I have access to their pay history. I'm gonna, it's kind of like a little bit insider knowledge. I can call them, say, hey, we already have this relationship.
It's
What's
easier,
up?
faster, probably within,
This,
if you say.
Yeah. so, is a bank statement qualifying mortgage harder than full doc? For us, it's not, because this is what we do all day. Okay. In general, a lot of lenders shy away from it. The underwriting takes a lot longer when you go to like a big shop who offers non-QM loans. You're probably looking at a 45 to 60-day close where, we can close in typically less than 30 or 20, just depending on the borrower and how quickly they get their stuff together. Okay. So I have in here, what makes this product seamless is if the borrower is cooperative with you and our lending team, And what does that mean? It means that they give us the information and answer our questions. One thing that we are very strict with is do we have a question from there?
No, she
Oh.
said that she was,
Oh.
okay.
Is we are very clear with our borrowers and saying, hey, this is exactly what you're gonna expect from day one. Day one, they know, hey, you're gonna give us your bank statements. We're probably gonna have questions. If you have large deposits, we're gonna have to ask you where they're from. Legally, we have to document it.
So I have a question regarding this. Okay, ask the question, if they respond, it's one thing. But do you require documentation to prove what they say is true?
It depends on what it is. That's the answer. If they're at the closing today, this guy in November, so the guy makes, $6,000 a month. In November, he had a $25,000 deposit. I was like, well, I looked at this guy's bank statement history. I never saw 25 grand leave his account.
Leave?
I never saw it leave. I never saw it leave because I was like, where did it go and how is it coming back here? Because as the lender, I'm sitting there and saying, if he took a loan out to make a down payment and we can't calculate that into his earnings, I'm screwed. This guy's going to default, right? I'm gonna have to take this person's house and that's the last thing I want to do, right? But it's inevitable because now we probably took a $25,000 loan on a 5-year term where he's paying an extra $1,500 a month on this loan that we don't know about. So in an instance like that, yeah, I'm asking him, what is that 25 grand? Where did it come from? And I want a copy of that canceled check because I want to make sure it's not a loan.
This is a big amount, but it's someone who have all the time 5,000, 6,000, 8,000, you gonna ask for each?
No.
Oh,
That's their
okay.
norm. That's the benefit of bank statement
Oh, okay.
underwriting is when they have consistent income, that's not a question. It's the anomalies,
Oh.
right? So if we're careful about it, right? Because that scares people. They think they're gonna get in trouble, and that's not the reason. We just need to make sure the biggest reason that we ask is we need to know that it's not a loan. That's it. If they said, hey, I got a $25,000 gift from my uncle, I don't care. Do you have to pay your uncle back? No. Fantastic, right? But if they're like, oh yeah, my friend gave me 25 grand, I have to pay him back in 3 years, but there's no documents, but now he told me. Sorry,
But you have to ask for the bank statement of his uncle, right?
no,
Where the money comes from.
no.
If he
It-
deposited
it-
the check.
That's a gift of
Depends
equity.
on the loan.
It's a gift of equity.
Mhm.
Yeah, some
Yeah,
programs require it.
Some banks require
Yeah.
for you to have a proof
Yeah.
of the uncle's money,
Yeah.
because we usually work those traditional loans, but with these guys here specific, hey. No
Yeah.
problem.
No, but
Now-
what they do, they ask him a letter for the people who give the money and with this, they do this.
And sometimes, when we know that they're getting a gift, you say, you know what, go and take the money to the title company. So you don't have to mess with the, banks or whatever.
Mhm.
It's better to just give the money to the title company and you go, this is
Yeah.
my
Yeah, the down payments there.
down payment, whatever, a gift from mine.
Yeah.
As long
Sometimes
as-
you can get a gift letter,
Yes.
but hey, okay, cool, we need a letter signed by your uncle that says it's a gift, not a loan. Okay, but again, there's always the strings that you pull, and there's hundreds of loan programs. My job is if they have an instance like that, my job, if I know that up front, I know I'm gonna steer them to a program that says, all right, we don't have to verify your large deposits. If you're worried about that, let's go this way versus this way. That is my job. That's what's going to make me an expert in this field, is knowing if they have these instances in their past and on their bank statements or whatever it is, we're going to steer them to the right program where we get them in their home. That's the goal, right? The goal is to get these people in their house. Questions on that right now? Good. Okay. So, when working with Pedro, he was excellent at understanding what we required from the borrower. And I-10 borrowers need a little more TLC and handholding. TLC, everyone know what that means? Tender loving care. We're good. Okay. So, how does this work? This is my wordiest slide. I apologize, but I couldn't make it pretty. But these are just some questions. You are all probably better at this than I am. But you ask, hey, what price house are you looking for? Is that realistic? And I'm gonna use the story that we had from 2 weeks ago in a minute, if that's okay. But can they afford a house in that price range? How much earnings history do they show? If they say, hey, yeah, I deposit all my money in the bank, cool, but I've been doing it for 3 months. Well, it's like, okay. Yeah, let me just call Chris and see if there's a program for that, right? And if there is, what else is required? Those are tricky. If they're not high earning people, those are hard loans to do, right? You know, do they 3 months, 1 year, 2 years? For most bank statement mortgages, I will say 12 months is the default. If they're self-employed and they've been self-employed for years and they say, hey, I don't want to use 12 months of bank statements. I want to use 3, but I'm willing to give you my profit and loss statement for my business that, you know, that's basically what we're going to do is we're going to say, cool, here's your P&L from your business. Your net income pretty much ties to your bank statements for the last 3 months. That's a very secure level of underwriting for us because now we know, okay, well, we have 2 years of his P&L. At least the last 3 months are really accurate on his bank statements. So it just depends on what that borrower is willing to provide and what they have. But rule of thumb, 12 months of bank statements, okay? How does your client record their income? Do they claim all their income on their taxes? If they do, easy, right? Don't call me. They're going to go to a different program unless they get denied for some other reason, right? Again, we can do those and we will be aggressive, but I'm sure you all have relationships already and we can't be everything to everybody. So if they don't deposit if they don't record all their money on their taxes, then we say, okay, does it go into the bank? And if that answer is, I make all my money in cash, it never goes into the bank and they don't file taxes, they're not buying a house unless they buy it in cash privately straight from the seller, right? With no mortgage at all. Just keep that in mind. If someone says, I make all my money in cash and it never touches the bank and it never goes onto their taxes, there's no way for us to verify that money exists or how it's made, okay? For instance, you have an I-10 client that has no credit score, but they deposit all their income into their bank account, but they don't claim their income on their taxes. That's a home run for us. Let's get to work. So what did Pedro do? This is my favorite slide. Okay, this is my favorite slide. Well, I called Pedro yesterday. I was like, hey, I need to share this. Is that cool with you? And he was like, yeah.
No, he's
of course.
probably on the beach right now, drinking
Oh, yeah, he was wasted. No, okay. No, okay. So,
You know what, this is a very good slide because sometimes we're very close-minded and they gotta be here, they gotta have this credit. And I always told my son actually does what would Pedro do?
Exactly.
With this client, think about it, what would he do?
Yeah.
And we would think our thinking happens like, okay, now we gotta think as Pedro.
Yeah.
Because he always found a way to make it work, every one of them.
It's crazy,
Yes.
you know, and he, and I'm sure that I'm missing something, right? There's obviously the relationship, trust, credibility that is established between, you know, Pedro and his clients. And I don't mean to compare everybody to Pedro. It's just, this is my experience with him and it's been very successful. So, and he always told me this. He said, Chris, you don't understand. Like, I sat down with them at the office. I made them bring their computer. I printed their bank statements for them. They brought their I-10 form. You know, if they couldn't find it, we found it on the IRS website and they, you know, we pulled it up and we downloaded it and we printed it. We looked at their bank statements. I took copies of their bank statements and created a PDF file. He's like, these borrowers don't know how to do that. But they have the credit, they can buy a house, they have the cash, they have the income. They just don't know how to get across the finish line. Okay. So here's what he would do. You would meet with them, he'd get their I-10. This is for an I-10 borrower, by the way. Since most of our borrowers are Spanish speaking and they can be a little bit more sensitive to providing information, this doesn't only apply to people with an I-10, right? So if you do have a borrower who's like, dude, I don't pay taxes, but I make 200 grand a year, I'm really worried about telling people that, you know, this is probably going to be something similar that you do with them. Okay. So he took a color copy of their government ID, which was their passport. It doesn't have to be a US passport, obviously. It has to be a government issued ID. That could be any government, just has to be government issued. If they have
matricula?
Yes.
No.
So we just finally last week got denied a title with a matricula card.
Yeah.
And we used them all the time with mutual title and now they finally stopped using them.
One yesterday.
And they took matricula?
No.
Yeah.
we were at the table and she didn't realize her passport was expired. So she has the
Matricula.
matricula. We called the bank, which it was Texas Bank.
They don't
They're
care.
okay with it.
They don't care.
That the
The
title
title company,
company
the
did
title
not
company.
Yeah.
okay it.
I know.
So we had to get a affidavit from someone that knows her more than a year.
Okay.
So they were okay with it.
That's their real name or something like that.
Yes.
It's interesting. At least tell you, look, problem solver.
Yes.
Good job.
Mhm.
Yeah.
You know, but I have a I know that's kind of a ridiculous thing, right?
No, the title company made the affidavit.
Oh, okay.
Yeah, they
So
do,
it's the title company, not one in the matricula.
Oh, wow.
The bank is, the lender's okay with it.
we,
I just don't understand
The
why the
longer
title
the money,
company.
gonna borrow the money.
So I have the loan that I was telling you, it's closing today. That person has a matriculate card. And I was like, hey, and I've asked him like 3 times, I'm like, hey, do you have, can you send me a copy of your passport? He kept sending his matriculate card. And I'm like, I don't know if this loan's gonna close, but like, but we'll see. I mean, they're closing today at 4 o'clock and I've already told them, hey, you just keep this in mind. You may want to show up with your passport.
for some reason, another title company, because for years and years and years, we used to use matricula.
Yeah. This
And
is
then
like
one
this
time
week.
it just, people stopped, the title company stopped using matricula, they want real passports.
Yeah, they're just easier to forge.
Huh?
Maybe 2008 when all the fraud went on.
I don't know, but
2009.
people, banks say, you know what, we're not accepting any more matriculas. And the bank did not care, but we had an incident where I know we had a contract and it was during the pandemic and it was COVID time. And I told my client, listen, we're gonna close it in I think it was in March or April, and your passport is gonna expire in January.
Mhm.
You need to go and renew it. And we were about to close, and the guy was praying, finally that he was able to renew it. But the consul was closed.
Oh, no.
And he was like, oh my God, we barely, and I kept telling the guy, you need to make the appointment, you need to make the appointment, you need to make it, because it's as an agent, it's our responsibility to check when the passport expired.
Well, it happened to me one time that they had the expired, passport, and they already had the appointment, but it was when the pandemic, and they take forever.
Yeah.
So I talked to the closer, and I know the escrow officer, and then I explained the situation, and then he said, if you know these people, okay, I'll do it. And then they do it. It was expired, but she had the appointment to do, and then she wrote it, look, I have been living here, this is my,
Right.
because it was not the first house, it was the second house that they're gonna buy, or they were selling.
Yeah.
And there are a lot.
Yeah, when those instances come up, the best question you can ask at title is, what do you need for us to close? That's it. Like, tell me what you need for me to do for us to close. And if their only response is they need a passport, well, find a different title company. You know, like,
Yeah,
But
I
if
know
you
you
run into that issue today,
yeah,
I'll call the title
will.
company and ask them, would you do an affidavit?
yeah, I will. Thank you for
Yeah.
that, by the way, because I
Yeah,
haven't heard of that. Because
yeah.
we never ran into this until this week, because Mutual Title, and you guys have worked with Mutual Title, they took matricular cards.
Who's the agent? You have an
Teresa
agent?
Meyer.
Eh?
Teresa Meyer.
Is the agent,
No, sorry.
the realtor, the
I'm
buyer?
sorry, for the closing today?
No, the realtor for the buyer, huh?
I don't know the realtor. No, this is through
Okay.
Sarah. This is Sarah's name.
Okay, yeah, well, yeah, sometimes they don't care, like the banks or whoever, but the title company, they're very
Yeah.
strict now.
Yeah, so anyway, moving on. So the last 2 bullet points over here, I think are really, really important. And this, I'm gonna go here first, and then I'm gonna go here, this sounds like a lot.
Yeah.
It's because it is. And I said before, we're all working harder to make money. And this might be one of those things, one second, that you do, whether it's for a loan with Hola Mortgage, whether it's a loan for somebody else.
Yeah.
For you guys, this might be something that you do that really separates you from other agents and gets people into their house. That's really kind of how it works. He sat down and he did the mortgage application with the borrower. Have you ever filled out a 1003?
Yes.
It is painful.
Yes. it
right?
is.
It's annoying, it's tedious, you don't know the answers to half the questions, right? And you're kind of sitting there just like, why do they need to know this? Right? Like, why do they need to know this? And the fact of the matter is, we can't change that because that is a government issued document that every mortgage lender needs completed. Okay, so we kind of have to bite the bullet and do it. So he sat with them and did the application with the borrower. And that went to Mindy immediately because it's online, it goes right into our loan system. And sometimes Mindy would just call Pedro while they're sitting there. Hey, you didn't answer these questions. Let's just talk about them. You know, how much do you think you make? Right? If you deposit $120,000 a year into your bank, can you give me an idea of what your expense ratio is? Because you can't just claim that you make 100, you're a business owner, you deposit 120 grand a year in your account. Well, you have business expenses, right? So you're really going to only qualify for a mortgage with maybe 70 or 80,000, not 120,000. Okay.
I have a question. Suppose that I want to start doing this like a Pedro.
Mhm.
I never have filled out any application. I normally send this to the lender, but I know that Laura, she normally do that. But what information we ask them to bring it so we can help them to fill out the application? You take a look?
That's fine.
Oh, okay.
Okay. The fact of the matter is, you're not going to be able to do everything for them, right? There are questions on the application like, do you own any other assets? Do you have credit cards? What are your credit card payments? You have a car loan. What's your car loan payment every month? How much is left on it? These are questions that you can't answer
Oh,
for
no,
them.
I have to be within.
They have to have it, right? They just need their phone. They should be able to log into their stuff and get their balances, their payments. If they use one bank account that everything goes through, you can kind of at least be like, hey, let's look at your bank statement. How much was your car loan last month? Right? I'm going to email everything to you as well, guys, just FYI. You had a question before, I'm sorry. Did you raise your hand? No. Okay. If you think about it, just interrupt me. Okay.
You know, you can go to, just go Google, 1003 application, and it has like, how many pages, like 5 pages?
Yeah, no, we have an application link. It's
Yeah, but
so easy.
So you can get an idea, 1003, maybe I'll print it right now, and you can get an idea what it's asking. And the best thing is that click on the link, you know, like who does the application for the buyers here? Raise your hand. Juanita,
No,
you don't do the applications?
no, I send everything to Diego and he does everything.
Okay,
I
go.
collect all the documents.
You collect all the documentation,
But I don't do the.
and then what is the turnaround for Diego to? So you tell him, hey, I'm sending you everything
Right away.
right away, and he's like on the phone right there.
Mm.
Yeah, okay, that might work.
Yeah.
So
Diego, the one in downtown.
I want to meet Diego. That sounds good. Actually.
Yeah.
Yeah.
Oh, well, Carolina.
Yeah.
He's in downtown now?
No, he's in,
El
The
colombiano.
story's changing here. I don't know.
Yeah, he's over there with Karina.
Wait, is he your assistant or something? How's this work?
He's a
Oh, okay, nice. Wait, he does the application for the borrower?
He gets them on the phone.
Oh, he does it with them. Oh, okay, perfect. Yeah. So
Yeah, we got it.
Yeah, dice Chris, he come over here with the client.
I can
And do
do
the application with them right next to when you
Whatever.
get
That's
the
what it
application.
says right there.
Yeah.
Your office or my office.
Yeah, I will.
I have-
If
You go to my-
yeah. I mean, my wife has my location, so you know. I'm joking. It's funny. Galleria on literally on the tollway in 635.
Oh, okay, not
Yeah.
far from-
And I live in Dallas as well, so I'm mobile. I mean, this is what I do all day. So I'm more than happy to be on the phone with you. I can meet you in person. I can sit down with you one-on-one and actually do like a mock application. So you go through it and you understand what it goes through, what it looks like.
That would be good. Nice.
Yeah, and then or you can meet at my office with the client. I mean, our office is, it's pretty and we have coffee and all that fun stuff, and it's central if that's easy for people. But yeah, look, my job is to make myself available for you.
So we can call you, set up the appointment, we can meet you at your office with the client, and then
If
you
you'd
can
like to.
help us
Absolutely.
to do the thing.
Yeah.
With the application and pick up all the.
I'll do
Yeah,
all of
let
it.
me tell you a little bit about Pedro. Pedro will come here,
Every day.
exactly, and not just every day, 3 times a day.
What do you mean 3 times a day?
He'll come in the morning and one client, and sometimes he's like, hey, I'm here. And he was like, oh, they didn't show up. And then he'll come up. I have another appointment at 2 o'clock, and I have another appointment at 6 o'clock. So sometimes he'll come like 3 times a day, because we've seen him.
Yeah.
And the reason he chose our office is because, he used to work with another company, but they were mobile. The company, they were somewhere and they didn't have an office. Because our clients feel more comfortable when they come into the office and sit down with them and you're making copies there.
Yeah.
So he loves the office.
Yeah. So last thing is, it's okay. It's okay.
We're looking forward to getting your email.
Yes.
And all of the-
Absolutely. It was really nice to meet you. Thank you for your patience, for your questions. I appreciate it. So I don't have them yet, because we're still doing them. I'm gonna email you. We're still building our website, so even if I put my website on there, it's blank. So Laura, that's the third time you've asked me for a business card. I'm gonna come down here and hand deliver you my business card as soon as I have them printed.
Do like this. You need to have it.
Oh yeah.
This is my business card.
Oh yeah, the QR code. All right. I feel bad that I'm keeping you guys long, so I'm gonna try to hustle here. Last thing for Pedro, this is one thing that he was really good at, and we kind of touched on this before. He under-promised and over-delivered. He really set the stage for these buyers and was like, hey, look, here's the reality, right? You want to buy this house, I say this tongue in cheek because I don't, agree with everything that's happening politically, but it's like, you're not here legally. You don't file all your taxes. He kind of told him, like, you're asking for someone to lend you money, and they have no background information on who you are and no history and no credit. So he would kind of, right, wrong, or indifferent, had clearly a style about him that resonated with that person. And it got them to really understand, like, hey, I'm not going to potentially qualify for, an FHA loan. It's just not going to happen. So am I willing, as a borrower, to say, okay, I'm going to pay 11.5 or 12% interest. It's high, don't get me wrong. But somehow he got across to them, like, that's what it's going to take for you.
Yeah.
Okay. And sometimes it came in under that, right? Or we could do a little bit of a higher down payment or lower down payment and keep that rate a little bit low. But he was honest with them, and he under-promised and he over-delivered. And I think that's a huge thing, is kind of set the stage, be conservative, don't be aggressive. If you have someone come in and say, I want to put 10% down in a house and I have a 650 credit score, and you go, I know a guy who's going to give you an 8% rate. And then you send me this documents and I go, this guy's not at an 8% rate. He's at a 9.5. Who looks bad? Yeah. It's not me.
No.
Right? So, and if you don't have the answers for people, the best thing you can say is, I will get you that answer right away. Because my job is to get you that answer as soon as possible. So, pre-qualifications. Yes, they're great. This is the best case scenario. Get a pre-qual before they start house hunting.
This is that one?
Yes, this is what we use to get a pre-qual. Okay. With a complete application and initial earnings documents, we can issue a pre-qual in 48 hours or less. We're quick. We get it done really quickly. We pull credit, we get it done, and we give them their pre-qual letter. If we have any questions, we'll ask them right away. But we'll give them their pre-qual letter. Hey, this is what we're willing to lend. This is what we're going to require for a down payment. This is what your estimated payment will look like.
Did you work for Hola Mortgage?
Yeah, I'm one of the owners.
Hola Mortgage?
Hola Mortgage.
Oh.
Yeah.
I think Hola.
Right? I love it. I thought it was a great name. And then what if my client finds a house they like before getting pre-qualified? That's not a problem. Let's just get to work. Right? That happened recently with one of our borrowers, is that they got denied from a bank. They had their eye on a house, and they're like, I need to make an offer, but I need my pre-approval letter to make the offer. Right? That's very common. You need a pre-approval letter. Right? So we hustled and we got them their pre-approval letter in, like, I think it was like 12 hours, because she already had everything. She already applied for a mortgage. So we had their 1003, we had her credit report, we had all of her bank statements, but she got denied. So we had to figure out, okay, well, what are we willing to do for you for this loan? And, there was a little bit of back and forth. We got them the pre-approval. She got the house under contract, and they're closing April. What's today, March? I think March 18th. How does my client apply? Options. So we kind of went over this already. We can walk through together. That's the 1003. We can meet in person. This is a link to the application. I'm also going to send it to you in an email. But you just click that link. You're going to see a nice, pretty picture of Mindy, my partner, because she does all the underwriting. You can complete it in Spanish or English. Okay. And then
That's good, then, Spanish,
yeah.
I can understand.
and then we also need the documents listed on here, which is copy of their government issued ID, proof of applicant and co-applicant income. There's a big bold writing on here. It says choose one. That means that you don't need to give me all of these. You just pick one. Does your client want to use their bank statements? Do they want to use their business bank statements? Do they want to use their 1099s or their tax returns or their W-2? Okay, it's pick one option.
So you have 5 options.
You have 5 options. Okay, some people have a spouse that's W-2, but their bank statement. Totally fine.
So both.
We take both borrower and co-borrower. Here's a big one. If you have, this is a tricky one. It's like people who got divorced, but they still have a bank account with each other's name on it. Those are hard because if you're qualifying using a bank statement with somebody else's name, there's nothing you can really tell me that doesn't say what income is theirs. That's not in, they might have income still going in here and they're not in the house. So if that happens, let me know. There's ways around it, but at the end of the day, we're going to want to get that person off the bank account, right? Or we'll look at the divorce decree. I mean, we'll figure it out. But long story short is the goal is to not have their spouse on the deed of trust, right? So, and if their spouse is still on their bank statements, we just have to work through that. But it's a hiccup, okay. And then the home purchase contract, of course, if it's available. Okay.
Say this word, hipoteca.
Hipoteca. I know mortgage.
Okay. Hola, hipoteca.
Hola, hipoteca. I kept it mortgage because what if people don't speak Spanish?
Yeah.
Right? Like, I think hola is still a well enough understood word where it's like, it's just an easy. It was I thought it was a welcoming name. Okay. We talked about this briefly earlier. My client got denied by other banks. This is common for us. Again, we are not subprime lenders, but a lot of loans get kicked out before closing because of the hiccups. Cash seasoning, right? There's an NSF in their bank statement from, a month ago that the bank didn't notice. An NSF is a non-sufficient funds. They had an ACH or something that bounced out of their bank account. And it got, the bank saw that and they're like, nope, sorry, we don't care what your credit score is. You had an NSF. We're not doing this, right? There's hiccups all the time. And it all just depends on what it is. And so a lot of buyers get the pre-qual, they get their house under contract, and then they don't close because financing goes through. I'm sure all of you have experienced that, right? It sucks, right? There's no way around it. You worked hard, you did everything right, and there's something that it just happened and it worked against that. It worked against them. If this happens to your client, call me quickly because we'll be like, hey, just tell us what happened and I'll let you know within minutes if we can help, right? We just need the actual honest answer of what happened, right? But if someone was really going through that process and they got denied, just give me a shout. If I don't answer my phone, I will call you right back. It's probably because I'm just doing the exact same thing with somebody else, but I love you more, don't worry. Communication, when in doubt, call, text, email. We're always available. This is what I do 24/7. I'm a very responsive person. It drives my wife crazy because I'm like, why didn't you text me back? But we're honest, we're clear, and we're quick. This is my cell. You can call or text. That's Mindy's cell. You can call or text. We're getting new email addresses. I have my current one, but I didn't want to start changing contact information. So when I email you all this stuff, it'll be from my new email address, just FYI. Okay. You have my contact information on here again. Any questions for me right now? We've asked a lot. I want to show you one more thing too, if we don't have any questions really quickly.
Go ahead.
Yeah, okay. So. Let's see here. The application links to the.
You guys still there? Lorena, Sergio?
We all see this? So this is Mindy, this is my partner, this is
Oh,
our,
I know her.
yeah, we're restructuring everything, so this is gonna say Hola Mortgage, but like we joined forces and we both had separate companies until a month ago. So this, it still all goes to the same place, but it's, this is gonna be orange and that's gonna say Hola Mortgage. Everything else will pretty much be the same. So this is the link to the application. Okay, I just want you to see what it looks like. If you wanted to do it in Spanish, right here, just click that little button. You can select English or Spanish.
Okay.
Okay, and this is the application. What this means is when you borrow or when your client walks through this. Oh, you know, I don't know if I'm sharing this.
So you have to create one account to start an application.
No, you did I log out of the Zoom call?
No,
Okay,
what happened is that
So-
you didn't share you shared the
Oh, I
presentation,
shared
but,
it, okay,
but you didn't share the website.
okay. Share. Here we go. There we go.
There you go.
Okay, so right here is where you can select English or Spanish. You don't have to sign in here. That's for me. That's for like Mindy and I. So all you're gonna do is hit get started. And it just brings you to all the things that they're gonna fill out. These magically correspond to all the sections on a 1003. So someone fills this out, it goes into our loan system, their 1003 is done.
Wow.
Okay,
So how long you think it take to?
it depends on the borrower. If they are prepared, this should take 15 minutes. Now, if it's a borrower that has a business and they've got 7 trucks that they have payments on, and they've got, you know, another 2 or 3 rental homes, it's gonna take a little longer because they just have more stuff to write down,
No.
right? But for first-time home buyers, 15 minutes, you know? It's very rare that we get the application and it's perfect. We are always gonna kind of call back and be like, hey, I noticed this, you know, let's fill this in.
You know, one of the things that one of my loan officers says, hey, don't worry about putting their stuff the O because it's gonna bring it up on their credit.
Say that again?
One of the things that one of the officers said not to worry about how much on their expenses because you have to put your credit cards information everything because when they put the credit everything is gonna bring it in.
Yeah, we're gonna see it on their credit report. Yeah, and that's what I'm saying, like you can just put like auto loan and put a round number in there, but you know, it's kind of one of those things. If you do it right or do it twice, have you guys ever heard that term?
Yeah.
Right? It's better to try to do it right at first. Every borrower is a little different. Sometimes they get really finicky or impatient. You want to be like, okay, let's just get this done so we start the process. That's fine. Eventually, we're gonna have to make sure that it's dialed in. Okay, but this is what it looks like. They're just gonna go through and yes.
Did you guys just do have like the list of houses available?
Oh,
Remember, did we still have a link for Mindy's houses?
oh, that's her own company. I'm not involved with her rentals and stuff like that.
The owner finance properties. Yeah.
Yeah, she did that separately. I'm not sure. I don't think she has any for sale right now, but I can
Okay.
ask her.
What about land though?
What was that?
Just for land,
We don't do land.
no land?
No unimproved land now.
Okay.
Yeah, that's just not our specialty, you know. I've been getting more and more questions about that, honestly. I just personally, I don't know how to underwrite it, so I kind of just stay away from it. But it doesn't necessarily mean it's a bad thing, it's just something I don't do. And then
How commercial?
I will do commercial personally.
Okay.
It just depends on what it is.
Okay.
I like the short-term bridge commercial loans that are like, you know, between $500,000 to, you know, $1.5 million that are kind of bridge financing.
Commercial, but he's an I-10 and he has his son with DACA
Okay,
and they have the money to put down. I mean,
yeah,
it all depends.
yeah, I'm happy to talk to you
They're
about that.
like within $1 million.
Yeah, that's a good, yeah, I kind of like to play in that space,
Yeah.
you know?
Gotcha.
But yeah, no, that's something that I like to do on the side, but
Okay.
we don't do it under this umbrella.
Okay.
Okay.
How much down will you require?
For commercial,
Yes.
it depends on the scenario, but typically it's about 30%.
Not less than 30%?
Well, a lot of the stuff that we're doing is in permanent financing. It's like bridge where they're doing rehab on commercial. So when I say commercial, I don't mean a house. I mean
No.
like a, more like,
Business.
yeah, retail building.
office,
Mhm.
Yeah.
Parking lot.
Yeah, because
little
typically they're
place.
just higher risk, because there's a lot of the ones that I've done in the past, which isn't a ton, I've done like 4, but. There's no cash flow from the property yet. So it's only asset-based underwriting.
Mhm.
So it's, we build the interest into the loan and, all that fun stuff, but there has to be an exit plan, right? Because I don't want that loan forever, neither do they. So, that's way more loosey-goosey. It's more of a hobby than a profession for me. But I like to play in that sandbox. Okay, last thing, and I'm sure you've all seen something like this. I just threw this together for Roy a couple of weeks ago, and okay, cool, you can see that. So have you guys ever seen something like this? It's just a mortgage calculator.
Yes.
A lot of people have it on their website.
Can you share that with us so that we can plug
Absolutely.
it for another client
I-
and while we have them in the application, it's like, hey, this working, is this? doing that?
That's why I have it. So I color coded it.
Yeah.
So manual data entry. That
I
means
love it.
any box that's green, that means you put in the number. That means you enter it, okay? Anything that's purple means if you delete it, you're probably gonna mess up some of my stuff, right? Okay, so try to stay away from the purple cells, but there are certain things in here that are rules of thumb. They're not super dialed in. This is more of like, I'm sitting down with somebody, they're asking me these questions. I want to know I want to look like I know what I'm doing. Let me just plug this in and see where we're at. So this was a real life example after the buyer seminar 2 weeks ago, right? So Roy had somebody sitting in his office. They wanted to put 5%, they wanted to see if they could do the First Financial 5% down program. Okay. And we asked them, what is your budget? They said $275,000 for a house. Great. They want to put 5% down. He made, I believe it was like 64 grand a year, right? So right here is just their monthly income. I put 64,000 just divided by 12. But put their monthly income in. He said he had no other debt. Okay. So I wanted to see, the reason why I built this, I was like, oh, that's really interesting. I wonder what that person's debt to income ratio is going to look like, because that sounds like it's a great option, but are they going to qualify for it based on their income? So what that did was, here's the down payment, here's the mortgage amount, here's the monthly P&I, the taxes and insurance, their total monthly payment. Okay. You can play with this stuff. This is the manual data entry part. If you know that person's going to get a 7.5% loan, put that in there. That's okay. How do I get out of this little guy?
You wanna send this one too?
I'll send this to you as well, yeah.
Okay.
There you go. 7.5%. They're getting a 30-year loan. You're gonna have to estimate their property taxes, right? You go all resources for that. You have to estimate their homeowner's insurance. I thought that was pretty accurate based on a $275,000 house. And just here's their closing costs, right? Their origination and underwriting, you can toggle that. Maybe it's 1%, maybe it's 0, maybe it's 3. I don't know. It just depends on who you're using. Appraisal and doc prep.
But yours is 1.5?
Ours changes to get deals done, to be
Okay.
honest with you. Yeah, we like to have 1.5% because that just covers the cost of our processors. But again, we're new, so we'll be aggressive. Survey and title, prepaid insurance, so a year of prepaid insurance, and then initial escrow, which is going to be more insurance, and then their prepaid tax or their taxes, and maybe some prepaid interest. That's that other box. That's if they're closing on the 2nd of the month, they're going to have a month's worth of prepaid interest that they're going to pay at closing that you need to calculate. So this is their down payment, their total cash at closing, 31 grand, right? It's a lot, it's an extra $15,000 in closing costs.
Is it including the down payment?
The down payment's right here,
Okay.
and their total due at closing is 31 grand. This might be a little bit overstated, but that's why I have toggles in here. Okay, just know that. I always when I'm like talking to a friend and they're like, hey, what are my closing costs going to be? It's typically between 4 to 7% of the loan amount. I've never seen really anything below that. Have you guys? I haven't. So 4 to 7%. I'm a conservative person, so I just go with the higher number, under promise, over deliver.
Yeah, 4 to 7% without including the.
not including the down payment. Yeah, of the loan amount, not the home price.
Oh, the loan.
Of the loan amount. So what did this show me? It showed me that this person's back end DTI is 53%. So even if they did have $31,000 to put down to buy this house, they're probably not going to get approved because they're paying more than half their income to their mortgage. That's very risky for a mortgage lender, especially at a 5% LTV.
What do you want to see?
Yeah, hold on, explain to me, I don't.
Okay, debt to income ratio. So what that means is however much money you make in a month, you're dividing, or sorry, however much your mortgage payment is, you're dividing that by how much you make in a month. So if someone has $1,000 a month mortgage payment and they make $4,000 a month, their debt to income ratio is 25%.
Okay, so if you divide the 4,000 between 1,000.
Correct. You're doing is you're taking their total monthly debt obligations and you're dividing it by their total monthly income.
Yeah, depends on the program. Sometimes you go 39%, like FHA, you can go up to probably about 50%, like a half. If they're making $4,000, the monthly payment can be $2,000, and some, but on this one, it's more 53%.
I think FHA is like 41.
41?
I think it's like 41, yeah. Unless it changed recently. But so First National Bank of America, big I-10 program.
How is the ideal?
It depends on the program. It depends on the program. The lower the better.
Okay.
The lower the better. Most people fall into the 30 to 40% range, I would say. Most. That's a gross generalization, but some are low.
50%.
Ideally, there are certain loan programs. So like First National Bank of America, they're a big I-10 loan buyer.
Not gonna
No, First National Bank of America. Yeah. They're in Minnesota or Michigan or something like that. Big player in the space. And they have an 85% LTV I-10 loan program. But they will go up to 55% DTI. Right? Now, that person might have to have a 700 plus credit score, but they will do it, right? There's always the levers.
Yeah.
Okay. So I don't know what First Financial Bank's DTI requirement is, but when I saw this, and I think that's a fair interest rate, I was like, man, I wonder if that's an approval amount, because for me, if I'm the one writing a check, or even if I'm writing a check with somebody else's money, that would scare me, right? Someone's paying more than half of their money in their mortgage, and they're only at a 5% down payment. All it takes is for one tree to fall on their house, and that loan is done, right? They're going to default. They're going to lose their house. They can't make any payments. Their HVAC goes out. They can't make their payment, right? They are really, really tight. Okay. So keep that in mind. So if you have someone here, and this is why I made it, because you were sitting down with that person. I was like, oh, I wonder if this would have been helpful if he was just sitting there doing this really quickly. Because you can do this on the fly and you can just look at it, and it's, I can add other stuff to it if you guys are like, oh, hey, can you add this so I can see what this would look like, whatever the number is. Happy to do that. But I will email this all to you. Just remember, green, you type in, purple, I did the math for you. Okay. If you ever have something where you're like, oh, I did something and it got all wacky, I'll just email you a fresh copy. Don't worry about it. Okay.
Yeah, if we do something we messed up, it doesn't mess up that you're seeing.
No, this is separate.
Okay.
This is just a little tool for you to use with your client on the fly. This is not the gospel. Just remember that. This is a tool for you to use quickly. Okay. That was the last thing I wanted to show you. I didn't realize that I was talking for an hour and a half. I'm really sorry. But I had a great time. Does anyone have any questions for me that I've missed? That is before their mortgage payment. So front end DTI means all their monthly obligations prior to their housing expense. Yeah. So, and that's another thing. Sometimes they have like a front end, they have 2 cars, credit card payments, child support. And then you put their mortgage on top of it and they're at an 80% DTI and you're like, sorry.
Yeah, you and Mindy are working on a bank or how to?
How did we meet?
No, how do you mean, no, what are the?
Los dueños
The,
de
rela-
la
the, the
compañía.
relationship, okay. About a month ago, I got a call from Mindy. Okay, we know Mindy because of the Pedro's program. And I didn't know what she was doing, I guess you guys were talking together because a lot of programs, because it's happening right now. So we're looking to do something much better, but we will let you know. That's what she told me about a month ago, and that's when Chris came a couple of weeks ago. Hey, I'm gonna have somebody come into your office and talk about different work, because now they're doing more programs than they used to do only private loans for a long time. And now they're spending and doing more programs. So that's why Chris is here.
Yeah, and I've known Mindy for about 2 years, and we just kind of did everything together but separate. And then I was like, well, I'm in my 30s. I'm willing to work 60, 70 hours a week. Mindy's in her early 60s, doesn't want to work that much. And I was like, well, if I do all the work, will you be my processor and underwriter and do compliance? You don't have to leave the house. And she was like, yeah. I was like, cool. I'm not going to pay you though. I'll give you equity in our company. So we created a new company, and she's, we both own it together. Correct. Yeah. So we own it together. And we have our private capital that's in there, and then we also have bank capital. So we're considered a mortgage bank, not a broker, which is kind of fun, but it sounds a lot more glamorous than it is.
So you're a mortgage company.
We are a mortgage company. That is
Let's
correct.
go.
Yeah.
Mortgage.
I went to a seminar on last weekend, on Sunday, and the guy who was the speaker, I did not know the guy. He was very famous in Mexico. Jorge Serrantos, and I didn't know who it was, but he said, 3 years ago, I was just like anybody else, but I got together with a young guy. The guy is about 40 years old. He's a good young guy. He was a computer engineer, and he loved to teach because he was a teacher. And he had doctors, and teaching masters and speaking. And he said, I want to do a conference. And the guy made him viral with 2 million followers. So now he's teaching all these courses. But he said, I didn't want to hire the guy. I want the guy to become my partner.
Yeah.
Maybe that's what.
Yeah. That's kind of how it went.
Yeah.
So,
If you got somebody that's very, very, very good, you don't want to hire the guy. You tell, hey, I want you to be my partner.
yeah. And it kind of worked out too, because we were just so complimentary in what we did. I loved this stuff. I love doing, lunch and learns and presentations. I like sales. I'm a finance person. I like the math. But if you say, Chris, you need to sit down at your computer for 8 hours a day and process loans, I'll go crazy. I just can't do it.
Yeah.
That's not how I'm wired. And she likes that. She likes being at her office. She likes having our another loan officer, our loan processor there. She has eyes on them, right? She's there for them. And it just worked out really well. Well, we'll see, but it's working so far. So yeah.
Okay, guys, any questions? Good. So we're gonna close the meeting, and I'll record it. And it's been recorded, and I'll post it on the website, okay? Thank you, guys.
Thank you guys. I appreciate it. Okay, wait, can we go around the room for names? Okay, I want to make sure I got everything. Maria.
Maria.
I need your Maria.
Juanita.
Juana.
The first one.
Yeah, I got you. Juana. Okay, Lily.
Lily, she's gone. She's gone.
Okay, that was good. Okay. And that's Yuri
That's Judy.
in the blue shirt.
Yeah, she's our superstar. He was supposed to come, but